Okay, students, we come to another important chapter, bank reconciliation statement and bills of exchange. These both are separate chapters. Let me begin first with bank reconciliation statement. First of all, what is the meaning of reconciliation? Reconciliation means rejoining. Rejoining what? Rejoining the differences. So what we are going to do in this chapter is we are going to reconcile, that is rejoin the differences between bank balance as per cash book and bank balance as per passbook, right? Now, first of all, what is the meaning of bank reconciliation statement? Mind you, again, it is a statement. I told you in the previous chapters that trial balance is a statement, balance sheet is a statement, and bank reconciliation is again a statement. And always any statement is prepared on one particular day. So, I make all the banking transactions throughout the month, and at the end I want to know what is my bank balance. So I am recording my transactions, and at the same time my banking transactions are recorded by my bankers. Now, if the bank balance as per my cash book and bank balance as per passbook, which is maintained by the bank, is same, then there is no problem. But if the bank balance as per cash book and bank balance as per passbook is different, we need to prepare bank reconciliation statement. So in another words, bank reconciliation statement means a list which tells us the difference between bank balance as per cash book and bank balance as per passbook. Now, first of all, who maintains cash book? Cash book is maintained by the businessman, that is a business organization, right? As explained to you earlier, we have already learned cash book, and in triple column cash book or double column cash book, you saw that there was a cash and bank column, right? So now let us try to go into details of this topic. First of all, a businessman has a bank account in his bank, the records of which are maintained in cash book. Now, which account is maintained by business organization or a businessman for his business purpose? It is a current account. I hope that you must be aware that in bank there are different types of accounts, like saving account for personal savings, thereafter fixed deposit account. For a fixed period of time we invest a fixed amount, and after a certain period of time, that is the fixed period of time, we get the maturity amount back. Then there is recurring deposit account, in which we have to deposit fixed amount of money every month or at a fixed period of time for certain number of years, and after that certain number of years are over, we get in return the total maturity amount. But here I am not talking about these three accounts. Here I am talking purely about the current account which is maintained by a business organization in the bank. First of all, in current account we don't get any interest, but we get facilities like overdraft facility, etc. Now, what is an overdraft facility? That I will explain you later on. First of all, let us just understand what is which account is maintained by a business organization. Business organization maintains current account, right? And which book is maintained by business organization? Cash book is maintained by business organization. So for this chapter, which part of the cash book is most important? For this chapter, bank column, I repeat, bank column of the cash book is most important. I will just draw a format over here, a rough format of the cash book, and make you understand it in more better way. Let us say this is a cash book. Debit side is nothing but the receipt side, and credit side is nothing but the payment side. So for this chapter, which book we have to first refer to? We have to refer to cash book. And for this chapter, in cash book, which column is most important? As you know, triple column cash book has three columns: discount column, cash column, and bank column. But for this chapter, we will be only referring to bank column of the cash book. So which column is most important for us is the bank column of the cash book. Whenever a check is received by the organization, entry is made on the receipt side. And whenever a check is issued by the organization, entry is made on the payment side. So on and so forth. All the entries are recorded in the cash book date wise, and as and when the check is received, or as and when the payment is made by the check, that is check is issued. Right? Now, after explaining which type of bank account, I would first like to highlight what is the need for bank reconciliation statement or why it is prepared. As I told you beforehand, it is prepared to reconcile the difference between bank balance as per cash book and bank balance as per passbook. This is the main objective or the main need of preparing the bank reconciliation statement. Now, why should we do that? So that if any errors have taken place, if any fraud has taken place, if any differences are there, we can always find them out and do the proper accounting of that. Right? Now, just before I tell you why there will be differences, let me also explain you how the transaction entries takes place in the cash book as well as in the passbook. For that, I will again show you by a diagrammatic representation of the same. I will prepare both the books. I will prepare cash book and I will also prepare the passbook. Let us say cash book is prepared by the business organization and maintained by the business organization. Likewise, passbook is prepared or maintained by the bank. Right? It is nothing but a record of all the banking transactions of the business organization with that particular bank. So, as I explained you, on the debit side is the receipt side. Whenever check is received, we record it on the debit side, that is receipt side. Whenever check is issued, we record it on the credit side, that is on the payment side. Similarly, in passbook, debit side means payments. It is always double entry system. So, if I am debiting any account, it will be reflected on the credit side of the passbook, and likewise if I am crediting any account, it will be reflected on the debit side of the passbook. As you can see, payments on the credit side in cash book, payments on the debit side. Similarly, receipts on the debit side of the cash book and receipts on the credit side of cash book. So first of all, what do we learn from this? We learn that in cash book, transactions are entered as and when check is received or issued. So let us say today is 25th March. I issue a check. Then I will record it on the payment side. Right? 25th March, I will put the date in the date column and I will put down the amount over here. Let us say it is 5,000 rupees. Thereafter, I will give this check or I will issue this check to the concerned person or the business organization to whom I have to make the payment. My job is over. What is the job of the business organization to whom I have given the check? What they will do is they will deposit this check into their bank, and thereafter, after a period of 2 or 3 days, funds will be transferred from my bank to their bank account and the transaction will be completed. So let us say if I am issuing the check on 25th and they are depositing the check on 26th in their bank, it will take at least 2 days to get the funds transferred from my bank account to their bank account. When will my bank pass the entry? My bank will pass the entry on the date on which the funds have been transferred. That is encashment of the check that has been issued. So, here what will happen is my bank will also make the payment entry for the same amount but not on 25th. I have made the entry on 25th because I have issued the check on 25th. But my bank will record the same transaction on, let us say, 28 March for rupees 5,000, the amount being same on the payment side. Now, as you can see, to get the funds transferred, it takes at least 2 to 3 days time. Here you can see that 5,000 rupees is reflected on the payment side of the cash book as well as payment side of the passbook. There is nothing wrong or no error in this. Amount is same, payment side is same, everything is perfect. But you can see over here, it takes some period of time, normally 2 days or so, to get the funds transferred. So, the dates are different. Amount and everything is same. Transaction is totally complete. Now, Let us imagine if I issue a check on 30th March, right? Next day being Sunday, 31st March being Sunday, the party to whom I have given check, what they will do is, they will deposit this check in their bank on 1st April or maybe say 2nd April. Then what will happen? My bank will pay to them whenever their check comes to my bank. My funds will be transferred to their bank account, but it will be in the month of April. Now see what happens over here. I have issued the check on 30 March. Let us say for rupees 2000. I issued the check. I record it immediately on the payment side of the cash book. When did they, that is the party to whom I have given the check, deposited? They deposited the check on 1st April or 2nd April. I have recorded my particular payment transaction in the month of March itself. But the party to whom I have issued the check have deposited the check in the month of April. Both the months are different. Whenever funds will be transferred, that is in the month of April, my bank will make the entry in my passbook on the payment side. Alright. So, from this you can see, I will just bifurcate. Let us say my bank has made the payment on 4th of April. So, what my bank will do? My bank will pass the entry on 4th of April for rupees 2000. Okay. So, over here what you can see is, I have made two payments in the month of March. Both the payments are reflected in my passbook also, nothing wrong. But if you look closely or if you look properly, now if I close my cash book for the month of March, then what will happen is my total payments will be for rupees 7000. And if I close the passbook, that is if the bank takes the total for the month of March, you can see the payment is only of rupees 5000. Now try to match this to balance. According to me, the total payments are of rupees 7000. And according to my bank, the total payments are for rupees 5000 only. Then what happens over here? The bank balance that I find as per my cash book and the bank balance that my bank will show as per the passbook will be different. Different by how much amount? Different by 2000 rupees. And where is that 2000 rupees? You can see that 2000 rupees is in the month of April. So if I have to compare my bank balance of my cash book with my bank balance of the passbook, there will be some difference. And in order to reconcile this difference, I will have to state proper reasons like check is already issued, but the encashment, that is the payment of the check, is in the month of April. When did I issue the check? I issued the check in the month of March. When did I pass the entry in my cash book? I passed the entry in my cash book in the month of March. When will my bank pass the entry? My bank will pass the entry in the month of April because the check has been presented for payment in the month of April. So, if I have to compare the balance of the month of March of both these books, that is cash book and passbook, the balance is going to be different. And in order to rejoin this balance, I take the help of this particular statement, that is bank reconciliation statement. So, just to conclude, in cash book, entries will be passed on the date on which the check is received or the check is issued. But in the bank, entries will be passed on the date on which the payment is being made by the bank or the payment is being received by the bank. And this it may so happen that I may pass entry on a particular date and bank may pass entry on another date, and this will lead to difference in bank balance. So the basic aim over here is to rejoin the bank balance of both the books. Now, first of all, why would the difference arise? Let us say if we are comparing the month of March. First transaction you can see 25th March, the amount is reflected in cash book on the payment side, and 28th March, amount is being reflected on the payment side of the passbook. Month of March and March is comparable, but over here second payment is made in the month of March itself, whereas my bank has passed the entry in the month of April. That is when the payment is made by the bank. So March and April is not comparable. So here what I have to do is I have to rejoin the balance, and therefore what I will do is I will first take the bank balance as per cash book, and then I will compare it with the bank balance of the passbook. If the transaction is recorded in both the books in the same month, then there will be no difference. But if the same transaction is recorded in one of the books in one particular month and another book in another month, then it will lead to difference in the bank balance of the cash book and passbook. So here basically what we are going to study is, we are basically going to study what are the causes or what are the actual reasons which leads to difference in bank balance as per cash book and bank balance as per passbook, right? So let us start by having a proper look at the reasons. Here you can see causes for difference in the balances in the cash book and passbook. First and foremost, very simple reason, check is deposited but not cleared. Let us say I receive a check on 30 March. So I will immediately record on 30 March 10,000 rupees. I will deposit that check, let us say in the month of on 30 March itself. Alright, in the morning I go to the bank and I deposit the check. As soon as I receive the check, I deposit. But when will I receive the payment? It will be after 2 days or so. So let us say my bank will pass the entry whenever the payment is received on the receipt side, but in the month of April. As you can again see, I have received the check in the month of March. I passed the entry in the month of March, but my bank will now pass the entry when the amount is actually deposited in the bank. Also, I would like to tell you that this payment side is also known as withdrawn side, and this receipt side is also known as deposit side. So here what is happening is entry in the cash book in the month of March, entry in passbook in the month of April. So this will lead to again differences between the bank balance as per cash book and passbook. So this particular reason is known as check deposited but not cleared.